Joining us now to kick things off, Jason Pride, Chief of Investment Strategy and Research at Glenmede, and CNBC's Mike Santoli also as well. So, Mike, yeah, energy, oil and gas, they're moving. Oil itself moving. Doesn't appear yet that there's a macro impact on the markets.
No, not evident right now, Brian, and probably in part that's because of just the absolute levels that we're coming off of here. Big gains. We've been at 73 in WTI not that long ago. So until it really imposes itself in terms of getting out of this band, I don't think it's a macro driver. We do, though, have a market that's apprehensive. It's in this kind of tactical pause mode, a little bit of an unsteady equilibrium here ahead of the jobs number on Friday, the October 7th, anniversary of the Hamas attacks on Israel. I mean, I think that's on people's minds, as well as everything stacked up between here and the election. And we're in this anticipation mode of, as you've been talking about, some kind of retaliation. All of that means we're going to wait and see, perhaps nervously. Now, against that, you have NVIDIA popping. Remember that old story? And that is supporting the overall market, as is the general sense out there that we have a Fed easing into what should be an earnings upswing, which creates a bit of a buffer against anything that we might be worrying about right ahead of us.
That said, Jason, would you there are energy investors who could say, okay, a couple dollars of upside in crude, we'll take it. The energy stocks are benefiting. At what point does this turn from a help to a bigger headwind for the economy and for markets?
I think it really depends on what exactly happens. And this is something that I don't think very many people are in a very good position to predict. Only those that are actually in the governments making some of these decisions have an idea of the magnitude of impact that we could have. What we do know is that events like this can escalate. That risk is, I believe, being reflected on the margin in the markets today, but not to a dramatic degree.
Jason, as you look into year end and the kind of shaky start we've had to October, we've had the stock market doing worse, but the data actually doing a little bit better. Explain that to us, and where would you be laying your bets?
I do think that we need to recognize that this market has been up quite a bit this year on a resumption of this thought process that we are in an ongoing soft landing. We've now transitioned to a period where the economic data, I think, is still coming in on the margin mix, maybe a hair onto the positive side. You have interest rate cuts coming, but valuations sitting relatively full. Well, they're sitting at highs. There's reason or opportunity for us to see a little bit of downside in the markets, but not so much that actually derails this ongoing market return and expansion. As far as where we would put our money, we'd recommend that investors take a hard look at their portfolios, recognize that quite often you're going to look at that and you're going to realize your portfolio is overly concentrated in a handful of very big names. And when you have overly concentrated markets or portfolios, the best thing that you can do is take a step towards diversification. This is an environment to diversify your portfolios.